Welcome back. You are with us on Open Exchange, and we're coming to you live from the CNBC-TV18 Motilal Oswal studios. We're keeping the conversation going. Nishal Maheshwari is with us. Nishal, thank you very much for waiting by as we were getting through some of the nuances on the Adani issue. Want to move ahead and talk to you about real estate. I mean, this is the one pocket of the market which really has been on fire, if I could say. Look at stocks like Lodha, for instance. So special take on macro tech, or maybe even some of the other Mumbai players. We know stamp duty collections have been soaring in the month of February. Would you back anything in realty?
So I think if you really look at the registration numbers, I think except for February, I think registration numbers are pretty strong actually across the country. And especially for high-end players like Lodha and all, I think it is to do with the budget provisions, basically, where the high-end or big-ticket items are basically getting some tax exemptions. So till 31st of March, and that's why you're seeing such large sales happening in the current quarter for something like a DLF, Lodha, and all. And that's why you're seeing the stocks reacting. But if you look at a broader sense, basically, yes, the market is still buoyant at the moment, but with this high interest rate now reaching a level, I think especially the mid-size and the lower income flats are definitely, those sales are going to get impacted. And that's my worry for the real estate for the moment. So play, if you may, basically, then you should be focused only into high-end DLF, Lodha, and Oberoi. But don't look at the lower end or the middle income flats.
Okay, so that's a take on real estate plays. Nishal, I mean, you give us, we've been throwing some questions at you. Let me reverse it and ask you the other way around. Considering that you are fairly cautious in the market, if you were to really go out there and advise on some investment, at least for the medium term, which is the top stock that kind of makes it to your list?
So we have been recommending clients basically that they should be invested into the domestic consumption stories. Because if you really look at it, the world over, India still remains to be one of the brightest spots. 5-6% anybody's guess basically what's going to happen and the GDP growth. But India is the brightest spot across. So we are recommending saying that you should be invested in domestic banks, FMCG, cement, construction. I'm saying these are some of the things basically, and capital goods. So these are 4 or 5 sectors basically which we have been recommending and totally asking people to avoid export-oriented. We are underweight IT, pharma. So I think that's the way we are asking people to build up the portfolio.
Let me just quickly run through initial comments from Rajiv Jain, who's founder of GQG Partners, which is basically on the other side of the block deals which happened. They've bought stocks in 4 Adani companies worth over 15,000 crore rupees. Let's, have the... Rajiv Jain, after the transactions, gave an interview to the Australian Financial Review. So these are quotes I've picked up from the article in the Australian Financial Review. So the first one is on the Hindenburg report. And this is what he says. He says they have their view and we have our view and we happen to disagree, but that is what makes a market. That is the first one on, of course, Hindenburg, which started this entire saga, with sharp correction starting the 24th of January. The next one is on Adani assets themselves, right? He calls them quote-unquote fantastic, irreplaceable. He says about 25% of India's air traffic passes through their ports and 25 to 40% of India's cargo volume goes through their ports. The biggest competitors are actually the Indian government, which according to him is not the fastest running horse in the race. So that's the bit on Adani assets overall. There is a specific comment on Adani Green, and that will come up. He says, and I quote, Adani Green Energy is by far the fastest and largest private sector green energy company in India. They're rolling out almost 3 gigawatts annually. So I think some of their assets are fantastic. Countries like India need to make the energy transition, and companies like Adani will help towards that. Now, many, of course, are wondering the reason why they're buying the stocks now. And the next quote kind of doesn't address that fully, but this he talks about them tracking Adani Group companies, and the quotes will come up. He says, he basically says that, they've been following the Adani companies for the last 5 years. And while they liked the assets, the valuations were in no man's territory, and they kept doing more work. And finally, the assets did become interesting. Do we have the quotes on corporate governance? Okay, I think we'll have them, and we'll kind of put them up as well. So interesting kind of commentary coming in from someone who's put in a large amount of money to work in this particular group. The rupee is open, the pre-open, 82.824. So it's a pretty strong start as compared to yesterday's close, which of course is weaker. The Nifty pre-open is indicative of a 200-point uptick. I think it should settle down. The Sensex is also starting. I mean, it'll be a good start. It'll be a positive higher start, but 200 in the Nifty, we'll see. Banks, of course, as we've been pointing out, because of the Adani-related news flow, perhaps get a bit of a lift. So watch out for that pack. Public sector, private sector, everything there should be in focus. Surabhi, but I think we have our next guest ready on the defense space.
Yes, absolutely, because this is one part of the market that's been really buzzing. So much of order inflow, a lot of chatter. Harsha Upadhyaya, Vice President, Industrials, Consumer Durables and Electricals, as well as Renewables at Elara is joining in. Harsha, thanks. Good to have you on the show. Well, for starters, we'll ask you to, wear your hat as a, defense analyst. I know you track a lot of sectors, including, large part of capital goods as well. The news flow keeps coming, right? Yesterday, we got to know that HAL has bagged, I think, orders around 6,800 odd crores for some trainer aircraft. There's a lot of chatter about a large, order on artillery guns. I think these new guns are supposed to replace Bofors. We don't know if Bharat Forge gets it or not. But the fact is that, there has been a pickup in order flow, at least on this one side, from the government. Now, if we talk about defense itself, then how are you slicing up the opportunity? And given that a lot of stocks have already moved, is there still an entry point somewhere out there, at least in some of them?
So morning. So starting with your first question, so the story on defense is largely on two fronts. One is on indigenization, which is what government is currently working on, and we have also seen a very strong correlation of what they are saying and what is the action on ground. So they have already allocated 75% of the defense capital budget, which is 1.4 lakh crore, which was 1.6 lakh crore, which was defense capital budget. Out of it, almost 75%, almost a lakh crore is something which is given allocated for domestic companies. So that is where the indigenization drive, which government is talking about, substitution largely. And the second big trend is on the export side. Just a few 15 days back, Bharat Dynamics also announced an order for exports worth almost $255 million. So that is also a very large order for them. So this is where the things are moving as far as defense is concerned. On the HAL particular order, so this was already announced in defense export that HTT 40 of 70 numbers would be given to them at 6,800 crores. We are also anticipating another 36 such HTT 40 to be given over next 3 years of a similar size here. Additionally, on where the entry point is, so when we look at the defense allocation, so a large part of the allocation is toward Air Force, followed by Army and Navy. So within that space, HAL is looking to be the most beneficiary given the size of allocation which is given to the defense capex within the Air Force space. Yeah.
All right, Harshal, I think we have a little bit of a scratchy line, but before we wind down, could you tell us your top picks and in order of preference as well?
Sure. So my top picks is Hindustan Aeronautics, followed by Bharat Dynamics and GRSC. Within the private space, I like Data Patterns.
Okay. All right. We'll leave it on that note, Harshit, for this morning. Thanks for joining in. The pre-open seems to be settling, and now it's a gain of about 0.7%, 0.75% basically on the Nifty, 130 points higher as expected. The entire Adani pack is up and about in positive territory, at least for the time being. Ports up 6.5%. You've got Adani Enterprises green, Total Gas, so lots of green out there on the Adani Group. Beyond that, SBI is the next big winner on the Nifty, and this could be sentiment rub-off. It is one of the key Indian lenders to the group, so that's a stock holding up well. You have other giants like Infosys, Reliance, TCS, L&T. Quite a few of the big boys, at least the pre-open suggests that they could be starting things on an optimistic note. So that's how it seems to be playing out. I think we do have Mitesh with us. Let's see if we can connect with Mitesh. Yeah. Mitesh, 9-10 call. The market looks like it's going to start well.
I'll go with the buy on Berger Paints. Target of 600 is what I'm looking at to begin with, maybe even higher, and a stop loss at 575.
Okay. All right. Mitesh, thanks a lot for that. Well, let's hop across to Vivek. He's here to talk about the top stocks actually for today to start off trade. Vivek, tell us more about the Adani Group.
Well, absolutely. Some interesting implications, and what we're tracking is what could be the implications from MSCI as far as the Adani Group stocks are concerned. So first of all, what's happened yesterday is that, it's the promoter entity that has sold stake, and which is why the free float in all of the Adani Group stocks, in the 4 out of the Adani Group stocks that saw the block deals yesterday, have actually gone up. So the promoters have raised over 15,446 crore yesterday, and this has been done in 4 group companies. Adani Ports 4.1% equity, Adani Green 3.5% equity, Adani Transmission 2.5% equity, Adani Enterprises 3.4% equity. So today, Citi has come out with a note. What they are saying is that given the fact that the free float now increases post the stake sale by the promoter group entities, there is a possibility of change as far as the MSCI treatment of Adani Group's companies within the May index review. So what they are estimating is that there could be some inflows coming in. So in Adani Ports, they are anticipating inflows of close to $70 to $80 million, Adani Enterprises $90 to $100 million, and Adani Green $40 to $50 million. Also remember, there was supposed to be an outflow in Adani Transmission. They believe that the scheduled outflows could actually reduce by half. Now, just for some perspective, in the Feb review, Adani Enterprises actually saw weight change downwards, approximate selling of close to $185 million. Adani Total and Adani Transmission, there were outflows estimated between the range of $150 to $175 million. That got postponed because the stocks were continuously hitting lower circuits. So at this point of time, it's still conjecture, but there could be some interesting developments and interesting inflows coming in the May index review.
All right, Vivek, thanks very much for that. So that's another angle to this story. Alembic is in focus. Ekta is here to tell us why. Ekta.
Thanks for that. Well, yes, Alembic is in focus because they have announced a 2-part piece of news. One is that there is an impairment which the company has taken, which is to the tune of around 1,150 odd crores. This is identified as capital work in progress. The impairment has been taken for 3 new manufacturing facilities in Gujarat, and the write-down is on account of COVID-19, the price erosion in the US markets, as well as a higher rate scenario, which has really impacted the approval processes from these particular plants. So basically what has happened is that the capital work in progress of these manufacturing facilities have been higher than what they now assume is the recoverable amount. There is a reorganization of the general reserves, which is to the tune of around 1,894 odd crores. Now, the overall impact is expected to be negative as per analysts, because the impairment is over and above the Allure write-down which they've taken. Allure is basically they bought stake in a joint venture in March of 2022. Now, the total write-offs taken by the company just in the past year odd is around 1,490 odd crores, not to mention that they will be looking to utilize general reserves to accommodate the write-offs. JM Financial has written on it. They say that the return ratios may improve due to a lower base. Most of the balance sheet cleanup is now done. They maintain a hold. Now, one of the things which is probably supporting it is the valuations, because the stock is down 36% from its 52-week high. It's very close to its 52-week low, and it's trading at around 21 times 1 year forward versus a peak of over 34 times.
Okay, got that. Thanks. We'll watch out for Alembic. Ekta, let's quickly recap why we also need to keep an eye out on GAIL. It's already up in pre-open. Sonal, so this is a pretty significant hike being proposed by the regulatory board?
Yes, it is. So the regulator PNGRB, they have proposed that the unified tariffs for pipelines for GAIL will be increased by 41%. Remember, just last month, GAIL had proposed that tariffs or the unified tariffs across their pipelines should be increased by 70%. Now, PNGRB says that they will set it up at $60.92 per MMBTU, which is a 41% increase across all the pipelines for GAIL as well. Now, of course, it is lower than what GAIL had proposed, but it's in line with what the street was expecting as well. Again, it's just a proposal. They do have to finally deliver it as well. Morgan Stanley says if approved, this would imply that there is an increase of 25% in terms of revenues in their transmission business, and EPS would also increase by 12 to 14%. However, as I said, they have an open house on the 6th of March. Consultation will be taken by GAIL as well. But if approved, it will be a big positive for the company.
Okay, all right. Thanks a lot for that, Sonal. Well, we've got just around, I think, a few seconds to go before market opening. It's going to be a good start, 130 points higher. The Nifty Bank, that's the one that's really going to buck the trend this morning. For starters, it's up 280 points odd. If it can get past that 40,800 odd mark, that's a crucial mark on the Nifty Bank. That's where the call writing is at around 40,500 odd. You have 300 rupees in terms of premium. So you want the Nifty Bank to go past the 40,800. And for the Nifty, we're starting off above the 200 DMA, which is closer to around 17,400. First start, you're likely to trade about that and take it from there. A lot of stocks, though, that are moving around in the the pre-open itself. So a lot of Nifty stocks have traded as starting well in the green. And the breadth of the market after a while, 5 stocks advancing in the first minute at least, for around 1 stock that's declining. Adani Group stocks, they're off in style. Adani Ports, Adani Enterprises, both of them are higher. And the banking names as well are recovering. You have SBI that's up and about, up close to around 1.5%. HDFC, the big boy in there, that as well as high. And all these larger cap names are doing well. Infosys as well as Reliance Industries. And as we speak, there's no stock from the Nifty that's in the red. ONGC just around a point or so, but I think that as well has moved into the green as we speak. So we're up 120 points odd from the broader markets. The breadth of the market is heartening. You have 1,500 stocks on the Nifty that are advancing, for around 250 stocks that are declining. And from the broader markets as well, the biggest stocks that are moving around are the PSU names. So you have Bank of Baroda that's up close to around 4%. ACC, Ambuja Cements, both of them. Now the promoter entity has a good amount of liquidity, so the street likes that. So you have Ambuja Cements and ACC, both of them up 3 to around 3.5%. PNB higher, SBI higher. So 2 segments of the market, Surabhi and Prashant, that are doing well. One is the PSU banks, and the second is the Adani Group stocks.
Oh, absolutely. the Adani Group is off to a rocking start, I can say that. By the way, there's some follow-on buying on an RVNL. Remember, that was a big story from yesterday, the huge Vande Bharat order. Even this morning, RVNL is up about 3.5%. MOIL is up about 2%. GAIL, there's a bit of a PSU play to a lot of these stocks. I noticed NMDC Steel also start out in positive territory. So the PSU move seems to be continuing from yesterday. Titagarh Wagons is more follow through again from the same Vande Bharat order. So these are some of the stocks that are catching the eye to begin with. In the broader markets beyond that, seeing a bit of a flip up actually even on an NDTV. I mean, since we're talking about the rub-off impact on a lot of the Adani companies, ACC is still holding on to a gain of about 3%. Union Bank, PB Fintech, these are some additional names that are coming out at the forefront. Canara Bank, so PSU banks in general seem to be doing okay. UCO Bank, 2% on the upside for the time being. This gain of 130 points on the Nifty is being held quite well. ITC, L&T, Reliance, Infosys, Lever, lot of legs to this move, at least for the time being. The one that's not participating is actually ICICI Bank. That's a stock that's sitting out for the time being. But Prashant, otherwise a pretty solid start.
Surabhi, almost at the high point for a day before yesterday, right? 17,467 was the high. The high today has been made at 17,460. So just 7 points short. So you're opening, as I've been saying, exactly at that first level, which you need to cross convincingly. And then, I mean, some of the resistances on a retracement basis start to kick in. But those are higher. Those are close to 17,600, etc. The next meaningful one is at about 17,600. But this is the first kind of zone which you need to cross over. Okay, just a few other names, and I'm just going to try and spot some volume-led gains. So Adani, I'll not repeat. They are doing well, the stocks. SBI is up 3%. Banks, of course, is something we were highlighting. SBI comes up with a 3% pop, 550. On very large volumes. Bank of Baroda is up about 3.6, 3.7% on decent-sized volumes. Canara Bank is up 2.5% at about 297. So this is another pack that we were highlighting from the morning. PNB is up about 2.33%, 50-51 rupees on Punjab National Bank. Bank of India is up 4%. So, I mean, actually, maybe a good time to look at the Nifty PSU Bank Index itself, which should be up north of at least 1%, if not more. There you go. Okay, 3% pop on the Nifty PSU Bank Index. That makes it by far sectorally the top gaining index at this point in time. There is a lot of Adani in terms of top volume-led gainers list today. So I'm going to, transmission, ACC, Wilmar, Total Gas, all pretty much at daily circuit limits, 5% mostly in most of these cases, except ACC, which is up about 3.25%. Surabhi already mentioned RVNL, so that's that. GAIL is up about 2%. LIC is coming up with about a 1.5% gain. Small one, but it's showing volume, so I'm just quickly mentioning it. There is Policy Bazaar, which is up about 3.33% as well, which is doing quite okay. Otherwise, what else? Lodha was limit up yesterday, 20%, right, by close. It's starting 1% lower, but it's the top volume traded stock on the downside. So keep an eye. Shree Cements is down 0.5% or so. I think there was a Goldman report with an underweight on Shree as they were pair trade, saying long Ultratech, maybe, go light on Shree. Sonata Software, which is, by the way, at a new high, it's pulling back a little bit. Very strong gains last few sessions, down about 1%. Edelweiss is down about 3.25% as well. I think there was a story yesterday that, there was some there were some issues with regards to the IT department conducting search at the premises yesterday evening. 62 or so is where Edelweiss is at right now. 136 on the Nifty, 17,460 is where we are at. So it's a good start, bang in line with what the SGX was telling us. Harsha Upadhyaya is now joining us, Chief Investment Officer, Equity at Kotak Mutual Fund. Harsha, great to have you with us here on the program. Thanks very much for your time. What's your view on the news flow with regards to, the big blocks that we've seen yesterday in the Adani Group companies? Now, our question is not so much about what to do with any of these companies, but as a market participants, as a fund house, how would you view this in the broader scheme of things? Because this did sour sentiment quite a bit. What was happening over the last 1.5 odd months or so. Will this put a stop to it, at least in the near term? Your sense?
Good morning, Prashant. Clearly, we never speak on any individual company or a group. So to that extent, I will not make any specific comment on the group or the stock, but definitely the overhang that the market was seeing in terms of short-term volatility related to the news flows seems to be kind of behind us, at least for the short term. And that's good. But obviously, a single day move cannot be extrapolated into next few weeks or next few months. We'll have to keep watching out on the fundamentals and how they shape up over the next few weeks, few months to really see the direction of the market.
Hi, Harsha. Good to have you on the show, as always. So give us your overall sense on the market, because it's been testing, right? It's not been an easy one to navigate in this year so far. So how are you looking at incremental additional deployment? Are you still keeping cash levels a little higher, or are you fully invested? What's the approach?
Surabhi, we never usually take any cash calls to manage our portfolios, or rather we keep very manageable levels of cash just to manage the liquidity issues at the portfolio level. So to that extent, we remain fully invested even at this point of time. Yes, if you look at our portfolios are cautiously optimistic in terms of economic recovery in the domestic market. Most of our positions are looking at businesses that have serious linkages in terms of domestic growth recovery. And to that extent, we believe that this is the basket which will be resilient in terms of earnings growth and also has room for valuation re-rating if economic recovery follows.
Hi, Harsha. Good morning. Harsha, the sector that got hit the hardest was the banks. And it was ironic because they came out with probably their best quarterly update in a long while. And post that, the stocks took the hardest hit. So the worst possible reaction. Now you have some bit of, fundraise from the Adani Group promoters, which if it was a sentiment positive, then it's good. It's playing out quite well. Post this correction on the Nifty bank itself, I think it's a 10% correction from the top. Are some of these stocks now looking good? If you are positive on the domestic cycle, if in fact you expect things to improve from here on, then which banks would you play?
Nigel, we have remained quite positive on the banking sector as a whole. And within banking, we prefer larger banks because clearly there is a scramble for low-cost deposits. And to that extent, larger banks will be in a position to handle that better than some of the regional banks or NBFCs. So our positioning hasn't changed despite the volatility in the market. But just to step back and see what happened actually, the banking sector was one of the best performers during 2022. And towards the end of the year, we did see a tactical shift from foreign institutional flows from India to some of the other markets which had underperformed in a big way. For example, China, Taiwan, Korea, etc. So to that extent, those who had made money on the banking stocks, and generally most of these portfolios were having reasonable exposure to banking, obviously sold some of those names. And to that extent, we did see in the past couple of months, especially year to date, banking sector underperforming the broader market. But we won't read too much into that because clearly, I think this is going to be one of the sectors which will deliver better than market earnings growth, and also there are no big asset quality issues at this point of time. So to that extent, we believe that this is likely to outperform the overall market, and we continue to hold our positions in the sector.
Harsha, you guys have been a little cautious, right? I mean, last few interactions that we've had, you, Nilesh, etc. on. What's your prognosis? I mean, the fact is that interest rates are going up, right? Not just in the US, but here in India as well. So is it likely to kind of remain a range-bound equity market? I mean, is the environment very conducive, or is it likely to remain tough for most of this year? So in that sense, what would you recommend? What kind of exposures would you recommend, apart from what we already discussed?
Clearly, Prashant, the interest rate movements across the globe, including India, remain worrisome. We have seen 2-year yields and the 10-year yields on the US Treasury going up to levels which we have not seen for the last 15 years. Since GFC, I think this is the highest level that we have ever seen. And we have not seen the end of rate actions yet. Despite such a sharp increase in interest rates, we have not seen any impact on the economic growth rates or on the inflation trend. So to that extent, it is natural that we will see more interest rate hikes across the globe going forward. We may not see that kind of interest rate hikes in India as we already have or are close to having real positive rates. But nevertheless, I think reversal in terms of rate action is also not expected. So to that extent, whenever you have higher interest rates, that's obviously going to have some impact on the growth with a lag. And it's also negative for equity valuations. So to that extent, yes, these are not the conditions which are the best conditions for businesses or for the equity markets in terms of valuations. But within that, we believe that market has consolidated over the last 1.5 years quite nicely. We are almost at the same level as we were at the peak of October 2021, or even lower than that, I would say. So to that extent, I think the interim earnings growth has corrected the valuations. So we may not see a very big downside in the market, but at the same time, there are no real triggers for a large upside in the market at this point of time. And overall, the direction of the market would be dependent on the earnings delivery going forward, because if you look at first 9 months, the earnings growth has been just around 9 to 10% on a year-on-year basis. But the expectations for next 2 years are at around 16 to 17% growth. If we are going closer towards that earnings growth expectations, then I think the markets can sustain the current valuations and possibly can move up. But if there is further disappointment, I think market will wait for those evidences to come through before making a new move.
Harsha, so, let's talk about something bright as we are, ending our conversation. If there's one thing that's definitely moved higher in the last several months, it's government spending, right? And that's really showing up in the award of orders and, fresh tendering. We saw that in Vande Bharat, that big order yesterday, railways otherwise, even defense for that matter. So what place does capital goods find in your funds? And how are you navigating valuations? Because some of the stocks, ABB and Siemens, for instance, they're sitting at lifetime highs now.
Surabhi, clearly the government has made its intent very, very clear during the last budget. The statement that has come out from the government shows that despite high fiscal deficit, we are not going to sacrifice our productive growth, and we will continue to focus on that. And in line with that, we have seen new orders coming through from the defense sector, from railways. And the expectation is over the next 12-18 months as well, the investments from the government side will continue to be very, very strong. So we clearly believe that we probably have made a bottom in terms of the investment cycle. What we are seeing now is clearly an uptick in the government spend. But slowly and steadily, we also expect private spend to pick up. It's already happening in a couple of sectors, but all-round capex growth is still not visible. But we do expect that to happen over the next few quarters. And the household investments into real estate also continue. So across the board, I think investments are happening at reasonable levels. And that is definitely positive for all the companies which are closely linked to the investment cycle, be it banking in terms of the credit growth, be it industrials, engineering, cap goods, all of these sectors. Yes, in some of these pockets, obviously, some of the expectations have already been discounted quite well. So to that extent, you won't see a uniform level of valuations. So wherever you're not comfortable with the valuations, obviously, you need to be careful. But overall, as a business, these sectors look reasonably well placed for the next 3 to 5 years.
Okay, all right. Harsha, before we let you go, we spoke about one pillar of the market, that's the Nifty Bank, and you like the large private sector names that you just told us. What about IT? In the past, you've said, no, you want to stick to the domestic names and they find preference over IT. But what's the stance now on IT? Will you look to selectively buy into some of those stocks?
Nigel, still the preference is for domestic businesses. Clearly, as I mentioned, interest rates are still moving up. We really have not seen a big dent in terms of economic growth or inflation in Western markets. So to that extent, interest rate actions will continue, which is not only negative for growth, which will have repercussions on the discretionary IT spend at some point of time, but also it's negative for equity valuations. And usually in a scenario where equity valuations are unlikely to move up, you will see pressure on some of the high multiple or high growth segments. So to that extent, clearly, those businesses which are trading at higher than market multiples will continue to have some pressure on valuation. And IT happens to be one of those. So yes, we are not completely negative on the sector, but as a preference, we prefer some of the domestic businesses where we believe that there is room for valuation re-rating. As against IT, where we believe we may not see that kind of a re-rating in multiples.
Okay, Harsha. Got that point. Thank you very much for joining in today. Always great to have you on the show. You have a great weekend, and we look forward to our next conversation. Well, the bulls looks like they're going to have a great weekend as well, Prashant, because this market, at least for the time being, is really building on the momentum. We are seeing about almost 1% up move, very comfortably above the 200 DMA. So that's one level, obviously, that's being held quite well. As of now, we'll have the gainers up for you on the screen. Adani, yes. SBI is adding more weight. Reliance is a big one that's moving. ITC, so we've got a lot of these big boys which are parting on the green side of the screen. So I guess for what it's worth, Prashant, I mean, we'll see the durability of this move. But I think right now, looking good.
I mean, you know, can't argue when someone puts money where their mouth is, right?
Yeah.
With regards to the entire Adani pack stock. And I think, as Harsha said, in the near term, it does put a bit of a stopgap with the sentiment sliding. It does support sentiment, not just for that group. And I think that the sentiment improving in that group is also so important because, you know, retail has been such a large participant in that group. Yeah. So I think, and we've been, of course, talking about how retail sentiment has been waning a little bit, etc. So that is an extremely important point. And of course, then there is the financials, etc., which also, at least, I mean, the exposure was not that large to begin with, but the sentiment hit was disproportionate. So, you know, in some degree, that also gets some support, which I think is a good thing. But, you know, for all the hard work today, Surabhi, for the week, we are up about 17 or 18 points. No. But it's turned into the green, which is the way to be as we wrap up another week.
Prashant, they're being greedy. You know, the bulls would take a flat week, no doubt. You know, after the kind of selling that we've seen the last few weeks, and Fridays haven't been very great otherwise. So it's good to see that the first 15 minutes at least, we're building onto those gains. The Nifty Bank has crossed that 40,800 odd mark. So that's looking quite impressive. And the Nifty as well heading to around 17,500 odd. It's a good looking screen, I would say.
Nigel, have you watched the movie Wall Street? The old one.
Hasn't? Who hasn't?
Yeah.
The 80s, the older one, Michael Douglas.
Yeah, we have, Prashant. Yes, we have. I mean, how do we convince you we have?
I'm not sure. I know you have,
okay.
But
I'm in the clear.
When you said greed, you're being greedy. I mean, that famous
greed
scene.
Is good.
Exactly. Gordon Gekko.
Gordon Gekko.
Go on, guys.
All right, guys. We'll bring it right back here to some corporate conversations now. Federal Bank is on our radar today. The bank reported a pretty healthy set of numbers for the third quarter. Return ratios were looking quite strong, slippages declining and asset quality improving sequentially. Ashutosh Khajuria, Executive Director at Federal Bank, joins in to talk about how the business is looking from here on. Mr. Khajuria, thank you very much for joining in. You know, I want to start with the growth question. I think that's what everybody in the market is fixated on. And that's where incrementally, sequentially, we know year on year, I mean, credit offtake has been very, very robust. But the question is incrementally, is it slowing down? Now, that's what the system-wide RBI numbers seem to be indicating if you're looking at the way January is shaped up. But you tell us, fourth quarter, because even in the third quarter, I think your Q-on-Q growth was around 4%, the growth in advances. How is the fourth quarter looking and your visibility into the next year?
See, I think when you say the growth rate is slowing down, I think it's because of the base effect. So there has been a sudden surge in credit growth, and it moved to as high as about 17.5% or so, touching 18. From there, you know, because the base now is strong, probably we may not have growth rates of something like, you know, I mean, 17, 18% now. It would settle somewhere around 15% plus minus 1 for the system as a whole. And Federal Bank normally has been growing about 200 to 300 basis points higher than the industry's average. So I hope that we would be somewhere between maybe 17, 18% for the year as a whole.
Good morning, Mr. Khajuria. And what about FY24? Mid-teens is what you're guiding for?
Yeah, I think it could be higher teens, if I may say so.
Higher teens?
Maybe high teens.
Okay, all right. You know, Mr. Khajuria, I want to understand which segments are you particularly focusing on? The gold part of your portfolio, I think, is roughly around 12% out of just looking 19,000 crores, I think, on a base of around 1,70,000 odd. Are you looking to, you know, grow that particular segment? If yes, what proportion of the book can it hold? And I ask you this because yields are better and there's big potential out there. We have seen banking names, you know, pull in market share from the unorganized market as well as from the gold financiers. So what's the focus on this particular aspect?
So yes, gold is the focus area, and we have been traditionally good at it. Yield is, as you rightly said, yield comparatively, when you compare it, may not be as high as NBFC's yield of 18-19% or so, but amongst the banks, I think it's a reasonably good yield with least credit cost, and that makes it a very attractive portfolio to grow in. So I think we would continue to grow, but I think to avoid any concentration risk, we may not cross 15% of the total book. I think we will review it when it touches 15% of the book.
Okay, Mr. Khajuria, does this mean that you will have to go outside into new markets, etc., as well, apart from markets we're already present?
Prashant, actually, the bank has been expanding outside Kerala for last 10 years or so. I think way back in 2011, we had about 700 odd branches, and majority, I mean, by majority, about 75-80% of these branches were only in Kerala. And now we have more than 1350 branches, and almost 60% branches are outside Kerala. So I think, yes, you're right. We'll have to grow outside the home market where the bank was headquartered at. And it's actually transforming into a national bank. So we are growing in Gujarat. We are growing in Maharashtra. Tamil Nadu is the major market next to Kerala. Then we have Karnataka. We are also in the eastern part of India. And traditionally, bank was present in states like Nagaland, Meghalaya, and all those states, northeast. Because at that time, it was just following the people who used to speak Malayalam. So there were lots of Malayali, priests and all, and educational institutions in northeast area. So bank also followed them. So like that, I think now it's making its presence felt on the Western India, Western Indian front as well.
What will it do to expenses, Mr. Khajuria, to do all of this, in your opinion?
I think numbers are speaking for themselves. I did not speak anything, see the CI, cost income ratio, right from March 2 to December 23. I mean, December 22, which is financial year 23. You would see the trend.
No, but this is the future, right? We're not talking about the past. As you expand into newer markets, and these are well-served markets, right? I mean, anything which is profitable is well-served. So you're fighting for share, which means you have to spend. So hence the question, sir.
Prashant, this financial year, we are going to open approximately, I think nearly 75 branches. And that could be nearly 5% of our base as at the end of March 22. And trust me, all our branches are breaking even, new branches are breaking even in a period shorter than what it used to be earlier. Earlier, I think in so-called unbanked areas also, it used to take 3 years to break even. In urban areas, it used to take 18 months to break even. Now we have some of the branches which are breaking even in less than 1 year. So I think cost income ratio would not be adversely impacted by expansion, and we are very wary of that. So I think growth would be that number of branches would be increasing, but while containing the cost.
Okay, striking a very confident note there, Mr. Khajuria. Let me come to margins now. I believe even in your analyst call, which happened just a few days back, you spoke about how the bank wants to focus more on high-yielding assets. So can you first of all elaborate on that statement, how exactly you're going to do it? And just an overview on net interest margins, given that I guess deposit repricing would still be an ongoing phenomena. How should we look at NIMs for the next couple of months?
Sulbhi, traditionally, bank has been more into secured assets. We hardly had any unsecured book. Practically none, barring some AAA corporates or so, where only short-term unsecured loans were being given. But that was the only area we had actually ventured into. About 5-6 years back, we started personal loans. Now we have launched about 1.5 years back. We launched our credit card as well, and I think that portfolio also is now gradually picking up. But whatever said and done, whatever we say, on the unsecured side, it still would be a smaller part because the base was negligible, and on that base, even if we grow at 100, 150, 200% in a year, that would not be very material in terms of the numbers. But that certainly gives kicker, and these are the high yield areas like your credit cards, CVC, commercial vehicles, and construction equipments. Then you have
so how much will you grow it to?
Banking. Bank has been
Got it, sir. How much will you grow it to, sir? I'm so sorry, I'm butting in because I'm trying to squeeze in more questions, paucity of time. How much will you grow your unsecured book to? I get the rationale. You want to go for high-yielding assets.
So, Ruby, it could be a challenge for larger banks who have a very large base, and growing on that at, double-digit numbers is a challenge. But a bank which is presently about 1 and 1.30, say 130 basis points market share in all, it's not difficult for us to grow at what the number I had told you, the loan book growing at about, say, higher teens, 16 to 18%, or, a particular segment growing at 40, 50% or 100%. So it's not going to be a challenge for us. So base also plays its role.
Right. Mr.
We are gaining market share, and that would continue to happen.
Yeah, but could you give us a NIM number, sir? I think it was closer around 3.5% odd. That could taper off a little bit from there. But what should we work with, sir?
I think traditionally we have been between 3 and 3.25. Now we have moved in the slightly higher category, 325 to 350 range. So it has definitely edged up by about 25 basis points vis-a-vis last.
We can work in that range of around 3.25 to 3.5 from here on as well.
335 to 340 would be reasonable.
Lovely. And also your net worth, you're looking at doubling it in the next 3 years, right? How much of that will be because of profit? How much of that will be because of fundraise?
I think it would be probably half. So right now our net worth is about 19,000 crores or so. And till 9 months, first 9 months, the profits are 2,100 crores. Now you can project yourself. I don't want to give any guidance on profit numbers, but for 9 months, the numbers were 2,100 plus. And then you can guess for next 3 years what could be the profit number. At best, even if 20% is payout to dividends and all that, 80% would be retained. So I think on that, these are very approximate numbers. And for further, micro numbers, you can contact our CFO. He would give you a better picture.
No, so we've got the picture. The net worth doubles in the next 3 years, and half of that will be from profitability, and some part of that will be from fundraise, right?
Yes.
Okay, it's been good speaking to you, sir. Thanks so much for joining in and giving us all those details. Wishing you all the best in the way ahead. Well, for the time being, though, we'll slip into a short break. When you come back, we'll be joined by a couple of other management. Nazara Tech will be joining in to tell us about the business outlook going ahead. And we'll also be joined with the management of Brigade Enterprises to discuss the trends in the real estate space.